Could the future of finance be lurking in the virtual world of cryptocurrency? As we navigate through the 21st century, there's been a seismic shift in the financial landscape. An invisible revolution swirling in the world of ones and zeros is causing ripples across the globe. This revolution is digital currency, and at the forefront is the elusive and intriguing Bitcoin. Born out of the 2008 financial crisis, Bitcoin was created as a peer-to-peer electronic cash system, a pioneering move that has since sparked a wave of digital currencies. Its decentralized nature and scarcity have spurred its popularity, and slowly, various sectors are opening their doors to Bitcoin. From e-commerce giants to real estate moguls and even some forward-thinking governments, Bitcoin is gaining ground and acceptance. The world is slowly but surely accepting Bitcoin as a viable form of currency. But what does this mean for traditional investments? As we venture deeper into this digital frontier, it's time to explore the potential impact and opportunities it holds for us all. Bitcoin's performance has been nothing short of spectacular, particularly in the last decade. From its inception in 2009, this digital gold has made headlines, turning the perception of finance on its head. It started as a mere concept, a virtual currency valued at a few cents. Fast forward to today, and it's an investment juggernaut worth thousands of dollars. Let's take a trip down memory lane. In 2013, Bitcoin hit a significant milestone. For the first time, a single Bitcoin was worth over $1,000. This was a moment of triumph, as it validated the potential of this fledgling currency. Bitcoin was not just a passing fad or a speculative bubble, it was here to stay. But the journey didn't stop there. Bitcoin continued to defy expectations. Fast forward to 2021, and Bitcoin reached an all-time high. Each token was worth more than $60,000. That's a staggering increase in value, especially when you consider its humble beginnings. However, it's important to remember that Bitcoin, like all investments, comes with its fair share of risks. This digital currency is notoriously volatile. Its value can skyrocket one moment and plummet the next. This volatility can be a boon for savvy traders who thrive on such fluctuations, but it can also be a source of anxiety for more conservative investors. Despite this volatility, Bitcoin has consistently outperformed traditional investment avenues. Even at its lowest, Bitcoin's return on investment has been impressive. Its meteoric rise is a testament to its resilience and the growing acceptance of cryptocurrency in the financial world. But let's not forget the underlying principle of investing. Risk and reward are two sides of the same coin. Bitcoin's impressive performance doesn't guarantee future success. It's essential to do your research and understand the risks before diving in. The roller coaster ride that is Bitcoin's performance is not for the faint-hearted. But how does it compare to traditional investments? Traditional investments have long been the safe haven for investors, but how do they stack up against Bitcoin? Let's start with stocks. Stocks have been the go-to for many investors. The average annual return on the S&P 500, a popular U.S. stock market index, has been around 7 to 8% over the past few decades. Not bad, right? Moving on to bonds, they typically offer lower returns than stocks, but with less volatility. The average annual return for long-term government bonds has been around 5 to 6%. Then there's real estate, another favorite. While it varies greatly by location and timing, the average annual return on residential real estate investments has been estimated at 6 to 7%. These traditional investments offer stability and security, which are crucial for any investor. They are regulated, and there's a track record to study, but they are also tied to specific economies, susceptible to local and global economic shifts, and can be inaccessible for some due to high entry costs. Now let's turn our attention to Bitcoin. Since its inception in 2009, Bitcoin has shown an unprecedented potential for high returns. Yes, it's volatile. Yes, it's unpredictable. But with that risk comes the possibility for substantial reward. Unlike traditional investments, Bitcoin isn't tied to any specific economy. It's global. And the beauty of Bitcoin is its accessibility. You don't need to be a Wall Street hotshot to invest. Anyone with an internet connection can potentially participate in this digital economy. But what about security? Bitcoin is built on blockchain technology, a decentralized and transparent ledger system. While it's not foolproof, it does offer a different kind of security that's not reliant on traditional banking systems. So, with all these factors at play, could investing in Bitcoin be a wise move? With its impressive performance and growing acceptance, Bitcoin presents a compelling case for investment. Yes, you heard it right. Bitcoin, the digital currency that has been making headlines for over a decade now, is not just a trend, it's an investment opportunity that could potentially offer high returns and a chance to diversify your portfolio. One of the key selling points of Bitcoin is its high potential for returns. Over the past decade, Bitcoin's value has soared from mere cents to thousands of dollars. This exponential growth has outperformed traditional investments like stocks, bonds, and even gold. But remember, with high reward comes high risk. The value of Bitcoin can be volatile, and it's important to understand this before diving in. Another aspect that makes Bitcoin an attractive investment is its scarcity. There will only ever be 21 million Bitcoins, and over 18 million have already been mined. This limited supply creates a sense of scarcity, which can drive up the price. It's the classic economics of supply and demand. But investing in Bitcoin isn't just about chasing high returns or capitalizing on scarcity, it's also about diversification. By adding Bitcoin to your portfolio, you're not just investing in a single asset. You're investing in a whole new asset class, one that operates independently of traditional financial markets. This can provide a hedge against market volatility and potentially enhance your portfolio's overall performance. However, let's not ignore the risks. Investing in Bitcoin, like any investment, carries its own set of risks. It's a relatively new market, and its regulatory landscape is still evolving. Plus, its price can be extremely volatile. So, it's crucial to do your research, understand the market, and most importantly, invest responsibly. In conclusion, Bitcoin is not just a buzzword or a passing trend, it's a serious financial instrument with the potential to transform your investment portfolio. But as with any investment, it requires careful consideration, thorough research, and responsible investing. Bitcoin may be a virtual currency, but its potential impact on your financial future is very real. So, with all this information at your fingertips, what's your next move? It's certainly a question worth pondering. We've shown you the potential of Bitcoin and how it's reshaping the financial landscape. We've compared it to traditional investments and presented a compelling case for its inclusion in your portfolio. Now, it's over to you. It's your decision, your money, and ultimately your future. But remember, every journey starts with a single step. And in the world of cryptocurrency, that step could be as small as investing in 0.1 Bitcoin. It's a modest start, sure, but it's a start nonetheless, and who knows where that could lead. Yes, there are risks, as with any investment, but the potential rewards, they could be astronomical, so why not dip your toes into the world of cryptocurrency? Embrace the future of finance. The future of finance is here. Don't be left behind. Consider investing in Bitcoin today and potentially reap the rewards tomorrow.